Happy Tuesday. Welcome to the Investing Master Series. My name is James Boyd. Alongside with me is my good Canadian friend, Barbara Armstrong. We welcome her back. And just want to give you a quick reminder that this class is recorded, so you could also go back and check the playlist. Let me share with you that playlist right now. And if you take a look at this is the playlist for this class. Now, just real quick, want to give us a quick reminder that Brent Morris did teach last week. That's why you see his name at the top. But other classes, you can scroll down and see other classes we've taught over weeks. Think of this like TiVo. You can go back, pick your favorite channel, and actually see the previous episodes. So I want to give you a quick reminder there. Now, remember with what we discuss, we're going to do it for example and illustrative purposes. Barb and myself, we do post also examples, announcements on X. You could follow Barb on X, or formerly known as Twitter. And there's my handle as well. When we show examples, remember they will be stocks and options based, not all options, okay? We'll talk about stocks as well. You say, well, I'd like to talk about ETFs. Well, we talk about ETFs Monday with Connie Hill, and we talk about ETFs Friday morning at 9:30. So again, every class kind of has a different focus. This class is focused on stocks and options. Now, remember with what we talk about, and when we talk about options, remember that options carry a high level of risk and are not suitable for all investors. The information here is provided for general informational purposes only. Some of the information you might think might be potentially applicable to you, or you might consider it. Others you might say not so much. That's fine, okay? So, and also remember that all investing involves risk. We will do examples in the paper money software application so we can follow through and practice in the paper money account together so we can learn. Now, also remember when we talk about short options, those can be assigned at any time up to expiration, regardless of the money amount. Now, remember, that means you have an obligation to deliver the shares, like if you did a covered call, or to buy the shares if you did a cash secured put. Now, this class, we'll talk about kind of where the market conditions are right now, what's kind of standing out to us, which we will cover. We will also talk about kind of some strategies and some stocks that we might consider focusing on, and talk about doing some example trades. Now, there are some interesting things going on right now. Some of the things you might I want to kind of focus on together, and I want to start off with just by looking at the Dow briefly. Okay, we know last week there was a pretty big push last week. We are kind of sitting right now at that little maybe potential bounce spot. Now that bounce spot, if you take a look at this, what you're now going to notice is, there's your breakout. If you're talking about it closing above the high, there's your down day, the red candle, and there we are right here. So now some investors, they might practice buying the large caps, okay, or have those already, but that's at a spot where it might bounce. Now, what we need to understand is there could be some stocks in the Dow that are already going up. Now, could you tell me which ones you're looking at? Okay, and we're going to come to that in just a moment. But don't think that the index has to bounce before other stocks do. That's not true, okay? Now, obviously, when we talk about the Russell, you look at that, it's kind of the same idea, right? We'd have to still say that the Russell, the small caps, have actually held up a little bit better, meaning they're closer to the Friday's high. And remember, the investor doesn't have to buy, let's say, the individual stocks of the Russell. They might just buy the basket, okay? And so far, we're trying to do maybe like a piercing line back to the upside on the smaller caps. When you look at the SPX, just briefly, what you're going to notice, SPX, I'd say when you look at a lot of these stocks or sectors, you're going to see that there's a lot of pennant patterns that are forming. And those pennant patterns are symmetrical triangles, if you will. They're kind of points of consolidation. And if you look at the SPX, we'd say shorter term moving average has gone green. We have not seen the 20-period moving average go green, not yet. Neither has there been a cross. So this is a little early on the SPX. Does that actually mean that this is is it not bullish? Well, it's still bullish if we're talking about, let's say, intermediate or longer term. Shorter term, we would say it's a little bit more neutral, trying to break out. Again, does that mean all sectors are flat? No, it doesn't. Okay. You're going to actually have to go open up the hood of the S&P 500 and say, which sectors do we actually see? And last one but not least, we'll just take a quick look at the NASDAQ. Now, the only thing I'm going to say on the NASDAQ is it's lagging the S&P here, okay? Where we do see a move in, let's say, the NASDAQ, or NASDAQ related, it's in the SOX. Now, we're not talking about the socks on our feet, okay? We're talking about the SOX as the semiconductor index. And if you look at the semiconductor index, it's gone up more than the NASDAQ had. So there's a neighborhood, if you will, that's pushing to the upside. This, if we close here, this would be the second highest close or the third highest close we've actually had in the semiconductors. Now, could an investor, okay, try to buy the basket potentially of the semiconductors? Well, that's one way. You're just buying the neighborhood, okay? Second is what stocks are in the basket, okay? So this is what so we're not just doing this where we're just looking at some charts. There's some thinking to that of like, what are some options available, right? Now, obviously, if we said semiconductors, we might say, well, what's NVIDIA doing? Oh, lo and behold, okay? That's one's probably the closest, but by the way, that's not all. What other semiconductors could be pushing to the upside? NVIDIA has earnings coming up right on the 27th. So really, tomorrow afternoon, they will announce those earnings, and this is going to be really interesting. Could it take the space up or down, okay? Now, I want to also go back to just real quick 2 charts that I think we need to kind of keep an eye on. One of the charts that we're going to kind of keep an eye on is gold. Now, we could actually say gold has been like watching the paint dry, so to say. But if you go back and kind of look at this, it has had a moving average crossover in the last couple of days. And I want to go back to what we see on the weekly chart, okay? When you look on the weekly chart, now, again, we're talking about weekly chart. On the weekly chart, tell me what you see on the MACD. What do you notice on the MACD? Now, what I'm going to do is I'm getting an answer. I'm going to kind of just put a line right there, okay? So I'm going to tell you how much I know about technical analysis, okay? So if I said, okay, all I know about technical analysis is that the green dots are higher than before, there's an uptrend. La la! Okay, now, if you take a look at this green dot higher than before, green dot higher than before, green dot higher than before, green dot higher than before. Welcome to an uptrend. Class is now over, okay? A lot of times we tend to make it so complicated. Doesn't have to be. And if those green dots are higher, that is what we call higher lows. Those higher lows, if we connect them, that's what we call an uptrend and or a trend line. Now, it's not always going to be perfect. You're just trying to really draw the line of best fit. Now, if you look on the bottom here, you're going to notice that we kind of have the MACD down at the deepest part and then the shallower part, okay? Now, why isn't the MACD down as much as it was before? Well, momentum is building. Momentum is building to do what potentially? Well, some investors might be thinking that it might try to break out. Now, if we were going to talk about, let's say, gold, name 3 stocks in gold that are the highest priced gold stocks. You got 20 seconds. You should know this by now. Don't act like you don't know, because if you've been listening, you know. Now, if I were going to say, well, I actually don't know personally, okay? And if I went into this and said scan stock hacker, and I said scan in, and let's say just a very basic search, okay? By industry, materials, and I'm going to say metals and mining. Now, I'm going to focus just on, and I'll go select all metals and mining. The ones I'm going to kind of focus on initially is I'm going to look for stocks over 40 bucks. Now, remember, the volume is right now, okay? This is not average volume. This is volume right now. So if I said 500,000 in the first 2.5 hours, that's pretty decent volume. How many do we actually get? Now, my question was, name the highest priced gold stocks. Well, it's not even really a debate, okay? You got AM, NEM, and then it just drops from there. You got BHP, which many of you know about. You got AU at 55. You got Freeport McMoran at 44 and change. But it's these 2 big ones. Now, why are we talking about the big ones? Well, you got to think about what institutional investors are going to be buying. You might also be thinking about if those institutional investors manage money for clients, are they going to really recommend to those investors to buy $4 stocks, $5 stocks? A lot of these institutional investors, they like to look for a little bit bigger market caps, maybe businesses that might be more established and have a history of making money. And they're wondering, could that trend continue? Maybe even a bigger balance sheet. Couldn't even imagine. Now, if I take a look at this, okay, now Reggie says, resistance, your voice, James. Can you say it, please? I appreciate you asking. Let's kind of talk about this. So trade number one, we looked at the gold chart. We noticed that there's a little bullish divergence on the MACD, okay? Now, a lot of times we think, well, a bullish divergence, you need price coming down. Well, who said? Who said that, okay? Well, it's the same idea. If you get price coming down and the oscillator going to the upside, right, there could be a change in trend from going down to snapping back up. Same idea if you get a stock that's kind of maybe flat or consolidating and the MACD is actually turning to the upside, it could be a continuation. It's the same idea. Now, I'm going to go to just real quick, the first one, right, AM, just take a quick peek with me, okay? If we look at AM, I'm going to go back and look at, let's say, the 1-year daily chart. And this is where AM, now again, I just want to make this simple. I don't want complex, okay? So we always talk about, is the 10-period moving average green? It's been green for the last couple of days. If we actually look and kind of said, well, where do we see the 20-period moving average go green? It was right there. Do we actually have a crossover? Well, yes, and it actually happened on the same day. So really, when we talk about if someone got in on entry day number one, that would be the earliest sign of potential entry, okay? If someone says, I like to wait for confirmation, well, they're trying to get in on number 3. Now, wait, why did you go to AM? It was at the top of the list, okay? Now, if I look at this today, and I want to go back to where we were just on Thursday for just a second. Thursday was this day, okay? Yesterday, Monday, was the red candle. Oh, red candle, I'm scared, says the investor who doesn't have experience yet. And we know that those red candles might be opportunity to buy the what? Dip. And the dip in the what? The price. And the dip in the price closer to what? Support. Well, do you like to buy high or do you like to buy the dip closer to support? Well, a lot of people like to buy that little dip closer to support. Now, so some investors could or would buy on the red candle close to the moving average, as long as the price is still above the moving average. Some people like to do that. Now, if the investor said, well, no, I want an actual entry signal, which we've already had one, but if I said I want another setup, well, there's your hold or trade above the high of the low day today on AM. Trade number one example we're going to look at is we're going to right click on this, buy custom. We're going to go to with OCO bracket. Now, what we're going to do in this example, and I'm going to pull that up right here, AM. We're going to come back to Fargo in just a sec. We're going to right click on the chart. Now, if we right click on the chart, we're doing a stock trade, okay? Right click on the chart. We're going to go down to buy custom. We're going to go with OCO bracket, okay? Now, when I do this, okay, now here's what happens. There will be investors who say, I'm trying to find the perfect gold stock. I'm trying to find the perfect gold stock. And I spent the last 4 weeks trying to find the perfect gold stock. Look, sometimes it's not about finding the perfect stock. Sometimes it's just about finding something that has a correlation with the price of gold, okay? What's moving with gold? Sometimes it's not finding the perfect one. It's just finding something that's trending, okay? Now, if we take a look at this, we're going to type in the price, and I'm going to let that float for just a sec. So when I unlock that, what it's doing is it's letting the price move as we talk about this order with the current price. That's what it's doing. Now, what I'm going to do is we need to know a target, calling all technicians. Where's the target, okay? And if we actually go back and say the stop, or how far below support are we going to set this? Well, if we did this, if we kind of said, well, that last low was at 134.84, the last kind of C port was right at 131.69, those might be some markers to set a stop underneath. if we took 134.84, okay, and if we took less 2%, it's going to give us 132.14. So 132.14. Now notice when we did our kind of the routine, we came up with investing ideas. That's the whole point of a routine, okay? Now what I'm going to do is I'm also going to go back and kind of set the position sizing and see if we use $6,500 as the capital size, it's going to be 46 shares, okay? Now, if I did 46 shares and said, okay, 46 shares, that's the capital that we could use, and that 46 shares is about $6,500. Now, if we set a target, what are we talking about in terms of a target? Now, if we looked at this and said, well, where might this go? Do we have to have a target? Well, the problem is if we go back and really look at this, it kind of looks like it's just continuing to the upside. The last time that we really had maybe any horizontal resistance, okay, I made you wait for that. If we take a look at, now I need you to say it. Forget if I say it, resistance. Now, if you take a look, if I were to draw that and kind of go from resistance down to maybe that pullback area, you really have an extension. You're already at the 161 extension. Where's the 261? Well, the 261 is not on the chart, and it's not. Now, if it's not on the chart, it's probably just not checked. So when you draw the Fibonacci, we can right-click on it, edit the properties, and just make sure that those lines are checked. Now, one thing I want to kind of do is I'm going to put a 2 on, which is a channel width, okay, add on top of resistance. And the other one I'm going to put on here is that 261.8. Okay, now what it's going to do is it's going to give us some lines that are not as high as obviously the previous line that we had before, the 423. So if we kind of set a target like a channel width breakout, that's going to be 146.21. If we set a 2, which by the way, the 200 is not a Fibonacci, right? If we said it's just the channel width, add on top of resistance. If we actually said, for example, the Fibonacci, well, that would really be right around 158. Now, I don't know about you, but I'm kind of like a person that's a little skeptical, okay, in nature. I can look through a keyhole with both eyes perfectly. Some of you get that a little later, okay, and then chuckle. Now, if we take a look at this, I'm going to set a kind of target, maybe not as rosy. I'm going to say, look, if I put, for example, a target at 150, that's kind of like almost in between-ish the 200 and the 161. Now, trade number one, what we're going to do here is we're going to buy the shares of stock of AEM. And we're kind of wondering, can that gold price continue to go to the upside? Now, a lot of these gold miners, they might do silver. They might actually do copper and so on. I want you to kind of think about fundamentally, okay? What happens if you mine the same amount of gold, but the gold that you mine is worth more, meaning you could sell it for more. There could be more profits, right? And also the asset values of those businesses could be worth more because the price of gold is higher. And if it continues to go higher, it might make that operation more potentially valuable. That's what investors are trying to buy, thinking it might continue. Don't know for sure. That's why they said a stop and position size. We're going to go confirm and send. Read what the stop order is saying again. Trade number one, AEM. Now, James, that trade number two, just real quick, and I'm not going to go fully into it. The NEM, okay, I want to go back to this. NEM is very similar. It's just kind of a little bit more push to the upside. Now, I want to go back and see if the paper money account has NEM. And I just want to double check this, okay? So if I bring up, let's say, NEM, do we have that? So we have a remnant of a position, but we don't have a bullish position, okay? So that's on the IRA. Let me check the margin. Do we have anything? Nope. Do we have anything on AM? And if you look at that, we'd actually have to look at this and say, okay, the only thing we have is just the one. Now, when we say we, in our class paper money portfolio. Now, when you go back to this, what I'm going to do quickly, because we can, I'm going to go back to the IRA. We're going to go back to we're going to use this example. Notice we still have that long put. Where did that position come from? Well, we had a short put. And then we were using the 45 put as downside protection. Now, I appreciate that it's still here. What we're going to do is we're going to use that still. And we're going to go look and see, could the investor say, could they try to sell something? Now, if you sell a put, you're really saying, look, I don't mind to be the buyer of the shares at the strike price from now until the time let's say you place it now, the investor does, until expiration, not just at expiration. We talked about that. So let's say the investor said, James, I want to sell this 71. I'm thinking that the price could stay above 71. And wonder if it goes higher. And if it goes up higher, the puts decline in value typically. And what we're going to do is we're going to sell the put by itself. Now, wait, if we sell the put, this by itself is a cash secured put. But if we have the short put, if we enter the short put, and then we have that long put, it's really like a short, wide put spread. You could also think of this as a cash secured put with downside protection. It's not new. We've done this before. But trade number two, what we're going to do is going to sell the 71 put, okay? And the investor is saying, look, I don't mind to buy the shares at 71 from now to expiration, but give us an upfront premium. Now, when some investors do this, they're thinking, man, I made $174. You didn't make $174. The $174 goes in your cash. You haven't made it yet. We got to see where prices go. And we haven't realized anything. That cash, though, goes into your cash balance. Confirm send. Trade number two, we're going to re-put back on that short put, which makes it a cash secured put in the IRA account. Send that order. And we're going to see if that actually trade fills. Okay. Now, I want to do it just real quick as we kind of do this. Want to give us a quick reminder that if you say, hey, is this just like a one-off class if you're not joining us weekly? No, you can go right to YouTube. I mean, who doesn't use YouTube, okay? I mean, everyone, okay? So when you go to YouTube, if you just typed in, let's say, Trader Talks Schwab Coaching Webcast, okay, or just Trader Talks Schwab Coaching Webcast, it's going to get you this page. How much does it cost to subscribe? Zero, okay? So if you haven't subscribed yet, I don't know what you're waiting for. I want you to practice your entry on subscribing. And so on your page, if you haven't subscribed, I'm having a little fun with you. If you haven't subscribed, just subscribe. Anything that you subscribe to, it's like a channel. Like if I like, I don't know, nature shows or whatever, I subscribe to nature shows or whatever it is I like to watch. And it's like a channel. That's all it really is. And so when you go to YouTube, you can pull up things you're interested in. You go to that channel like Trader Talk Schwab Coaching Webcast, and you could see that content. Now, the other thing is it's also free to like this video, and so just smash that like as well. I mean, it's just kind of ways to help us find the material. Now, the last thing I want to kind of say is, if you said, hey, James, where could we also see like maybe a schedule, just real quick? On schwab.com, just right on the homepage, if you go right to where it says learn, now notice we have not logged in yet. If you go to learn and you go to right to where it says Schwab Coaching, we haven't logged in. We're just the homepage, Schwab Coaching. If we click on Schwab Coaching, what you're now going to notice is it will say live webcast, which we're doing now, on-demand webcast, recorded, or in-person events. Now, if I click on live webcast, this is where you're going to see a schedule, okay? Now, by the way, this is not a bad idea. If you have kids, grandkids, okay, or friends, family, and so on, not a bad idea that you could show this also on your phone, your iPad, and so on. It's actually, if they're a Schwab client, it's free that it could actually watch these, and many of them, they're recorded. So check that out as well. Now, the other thing is if you said, James, I'm interested in, let's say, going to Barb's class. Well, just over here on the right, if you went to Barbara Armstrong's, click on Barbara Armstrong, it shows her schedule. If you actually said, look, I'm interested in Ben Watson, it shows his schedule, okay? So you could kind of say, well, I'm interested in when you teach. It shows my schedule, okay? And so that's a kind of an easy way. I'm just kind of answering some questions I get a lot. How do I find that? Just want to make sure you know how you can find that, okay? Now, let's also go back to other examples. Now, are there any questions? Bill says, is there also a video of JB bouncing off the tube? At my local church, I was asked to teach the youth, and Man, the youth said like that was the most entertaining class they've ever had. And the parents would call me occasionally and say, I don't know what you taught them, but they came home and did the dishes, to clean the house, the whole 9 yards. And I just keep teaching them whatever you're teaching them. And we're teaching them to be responsible, okay, and focus and concentrate. So the biggest actually thing is a little fun there. But yeah, here's the deal. Investing in general is interesting, okay? And it doesn't have to be like a dry subject. Now, I do want to kind of talk about some other stocks that are kind of standing out. So we talked about NEM, AEM. I want to go to just a couple stocks that are standing out a little bit, okay? RCL. Now, remember, we kind of talked about some of the changes potentially in those who are Social Security recipients, okay? And maybe they might not pay tax. We kind of talked about what that might do in terms of consumer discretionary type stocks. Now, in my neighborhood, I'd probably say over 50% of the neighborhood is retired. Okay, I was hanging out with them on Saturday, a couple of them, and they said, James, make sure that you pay Social Security. That way we can get our benefit. So I'm always like the heel of the joke. Okay, yeah, I mean, they were laughing. I didn't think it was that funny. At least I didn't want to show it to them, okay? Now, here's the deal. When you look at RCL, now what we kind of talked about, as Americans, and let's throw Canadians in there as well, people sure love a good dadgum vacation, even though they had one last month. Now, with my kids, I always tell them, you don't need a vacation because you haven't done anything yet. And if they said like, well, I'm tired, I'd say, I don't know what you're tired from because you haven't done anything yet, okay? You can't be tired, okay? Now, so I try to kind of not allow my kids to kind of like live that good life. I want to kind of just teach them that life, you got to fight through it sometimes. That's what I'm trying to teach them. I'm not sure if it's working. Now, the big thing, if we take a look at this, it kind of has a fill in the gap type pattern. Now, remember we talked about this about a month ago, right? Where it gapped down. And we said if that gap down is a green candle, we draw the resistance from the closing price, which we did, 334. Now, what you're now going to notice on RCL, we actually see that it's now filled in the gap. Well, that's interesting for many investors because what it is that gap is kind of the negativity. This is where the stock gapped down and many investors sold. Now, over time on that earnings, it kind of went down and it crossed back up. Now, let's see how good the signals were. Well, the first time we actually had a green line on the moving average, it was right there. Decent entry. The second time we actually had the 20-period moving average go green, it was right there. And what you're going to notice is when was the crossover? It was right there. So technically, this is kind of 1, 2, 3. And if someone said, well, from that point, where was the cold dot? Right there. Now, here's where I think this is amazing. You do not have to learn 52 different ways to get in. The entries could be the same. So if you're, let's say, 6 months into this, 6 years into this, or you've been in this 30 years, you could be doing the same entries, but you're just more proficient at following those entries. That's what I think is incredible. Now, sometimes I'll call up a friend of mine and say, man, did you see this entry? And he's like, no, I didn't see it at all. I'm like, how did you not see that? Okay. So here's the thing is you want to kind of a routine of what you're doing. That way you can stay on top of it. Okay. Now, I want to kind of go back to this and kind of throw in the question, could this be something that's extending higher? Now, is it just RCL? Is it Royal Caribbean or is it maybe who are the other companies out there? Well, could it be also like CCL? Well, if you look at CCL, this is what CCL is doing. What do you see in CCL? It's a bearish downtrend. Ain't wrong. Well, if we go back to, let's say, NCLH, Norwegian Cruise Line, is that as bullish as CCL and RCL? No, it's not. So if we go back and we're going to look at two examples. On RCL, we're going to go back and look and see, could we actually maybe do type of long call vertical? Now, why did you just jump to that? Well, first off, I don't know what the options are like. If we look at the trade tab, about 480,000 shares traded so far today. We go down to the 24 September expiration, the 19 September expiration, and we're just trying to look and see if there's any liquidity. Now, first thing I notice is I don't see any like really big liquidity here. And this bid-ask spread, I mean, if we said, well, what do you look at first? Open interest volume, or you look at bid-ask spread? Many investors look at bid-ask spread, 50 cents, 70-ish cents. And now when we look at the volume in the open interest, we kind of see maybe why it's the bid-ask spread is a little wider. So on RCL, we're not going to look at an option. Now, we could double check, but I don't see anything really liquid over here. Now, the bid-ask spread is a little tighter, but if we, that's not a ton of contracts. It's just not. So what we're going to show in this example, now, if we said call side or put side, we'd probably say put side. At least over on the put side, the spread width between the bid and ask is tighter, okay? Now, if we did this, if we said, no, I want to do an option, puts look a little tighter, okay, between the bid and ask. And if we take a look at this and say, look, I want to sell something, okay? Now, what we're going to do this, we're going to right-click on that 345. Now, if you sell the at-the-money strike, are you being more passive or defensive? Or are you being a little bit more aggressive? What's the strategy there? More aggressive or passive? Well, what we're going to do is, if you sell the 345, you're thinking that the price could stay above that and go higher than the strike. That's what you're doing. So don't think of this as, oh, I want the bigger credit. The only reason why you get the bigger credit is you're being more aggressive, okay? It's not free here. You're taking a stance. And that stance is you're saying, look, I don't mind to be the buyer of the shares at 345, and the investor thinks the price could stay above that and or go higher than that short strike. The only reason why the investor is buying the 340 is they want downside protection to make this a max loss. Now, the biggest reason, if you look at this, we get $1.87 for a $5 wide spread, and we see the maximum profit, the maximum loss. Now, in this market, where indexes are hitting new highs, right? New highs. The thing we got to understand is there's probably a lot of higher price dollar stocks. This is why people actually consider verticals. Now, you don't have to, but your friend might. So if we look at kind of the ROR, we're just going to say, what's 187 divided by 313? On the calculator, we just take the maximum gain given the vertical divided by the 313. Now, this actually gives us a 59% ROR. Some investors, they might say, James, I'd like to see a certain percentage or higher. You deem what you would like for yourself. Now, what I'm going to do in this is I'm going to take this back to 2 contracts. Why? Because it can. So trade number 3 we're going to do here is on Royal Caribbean. Now, this is not new. We've been talking about this for the last 3 to 4 weeks, as my friends have used me as the butt end of a joke, okay? If we take a look at this, Royal Caribbean, short put vertical. Why did you not do the calls? Calls didn't have liquidity, okay? It's more on the put side. If we kind of said, well, what about the open interest? It's still not really high. It's one of the lowest examples we've seen in a while in terms of open interest. Notice the commission there. We're going to send the order. And these numbers, by the way, they're changed for 2 contracts. Now, I want to also go back to if someone said, well, James, these are high-priced stocks. I can't, practice the entry, et cetera, et cetera. Well, let's go back to CCL. I mean, let's say someone says, I have a lower dollar account. Well, if we take a look at CCL, it's kind of more in that $31 range. Now, if I went back to this and said, you know what, could I trade something that might move like a stock, but have the leverage? Oh, okay, well, yeah, you could. We know that if the investor says, look, I'm going to go to the trade tab, buy, let's say 100 shares of stock. Well, if we pull that up on the risk profile diagram, we know that this diagram is really just charting the profit loss diagram, okay, of the stock price. Stock actually goes down, we're down. Stock goes to the right, goes up, profit loss diagram, okay? And notice the steepness or the slope of that line. The steeper the slope is, the more sensitive you are to direction. Now, we could try to emulate that line by just buying a call and selling a put, which we're going to do. Now, if we went to CCL, okay, trade number 4, we're going to go to CCL and we're going to say, look, could the investor, now, by the way, is it a good idea that all the expirations are in the same month? The answer is no. Okay, because if in the next 24 days the market goes down and all your positions are in the same month, just all your losses or gains are going to be in that 1 month. Now, what we're going to do is we're going to go down to the October expiration. Now, wait. When you go to the October expiration, you talk about buying a call. Well, if we looked at the 31 strike of the Septembers, there should typically be less, unless there's earnings or an announcement coming up. It should be cheaper than they are. If we look at the 31, let's say September, it's $1.49. If we go down to the October expiration, because there's more time, they're at $2.40. Now, same idea. If we actually say, look, if I was going to sell a put for, let's say, the 31 in September, the premium is less than if we look at the 31 strike for October. And that should make sense. I mean, if you went to a hotel and say, I'd like a room for 1 night versus 3 nights, you should expect that the 3 night is going to be more unless there's a Super Bowl on that first night. Now, what we're going to do is we're going to right click on that ask price for the 31 strike for October. We're going to go to where it says buy, and we're going to go to where it says synthetic. Okay. Now, the biggest difference between the synthetic is, number one, you have an expiration. Number two, we have bid-ask spreads on both the call and the short put. Okay. And the other difference is between a stock and the option is we don't have the claim to the dividend. Okay. So if someone who buys the stock, if the company pays a dividend, if they did, they could get the dividend potentially. The dividend can change. But with the options, we're just trying to play the movement in the stock. There's no dividend, okay? Now, what I'm going to do is we're going to look at buying the call, which buying the call is a bullish strategy. If you sell the put, well, that's a bullish strategy too. This is like a bullish sandwich. I'm making myself hungry. I am hungry. I'll be honest with you, okay? I haven't had breakfast yet. If we take a look at this, buying the call, selling the put, those are two bullish strategies. And if we kind of put this up on the diagram, it looks just like buying the shares, meaning the lines. The lines are identical. So if you buy the call, you sell the put at the same strike, the delta is going to be 100, similar, same to buying 100 shares of stock. The difference? Well, we don't have to pull out $3,100. We really pull out $63. That's quite a bit of a difference. That is true. Now, if you asked us what we like to show on this, just in case, what we don't like about this trade, some investors, they might say, James, I don't like being short that 31 put. Wonder if the stock goes down. Well, what we're going to do in this case is we're going to close that down. We're going to right click on that 31, and then what we're going to do is we're going to buy a put to the downside. Many investors do not like to say that the risk is all the way down to zero. That makes sense. So the investor might say, look, I'm just going to buy a downside put with a delta 10 or less, try to buy it for cheap. The investor is not planning that is going to ever be worth something, okay? But they're just kind of making where the risk is not down to zero. Remember, when you're short the 31, you're a buyer at 31. And when you buy the put at 23, you're a seller at 23. So let's think that through. Buy at 31, sell at 23. Well, that's $8 difference, less the credit. Okay. Now, if you sell the put at 31, you're the buyer, and the stock goes to zero, you lost $31 a share. So many investors say, I don't like that. And so that's why we're buying the put to the downside. Now, we could make that if we went, say, single order, first triggers SEQ, and we strapped back on that trade, that long call, there's that trade that is unlimited upside. Now, here's the deal. The short, wide put vertical, that is your positive time decay. The long call, that is negative time decay. The longer that we hold it, it's bleeding that time decay out of that option. That's the bad part. But what we're trying to do is try to make the theta where it's more neutral. So if I brought up this trade together, analyze that trade, let's take that off. There's your classic short put vertical. Blue line telling us there's a maximum gain. Absolutely. If we actually go down and actually look at this and say, can we see the downside on this? Wonder if the stock actually goes down. Well, we could see that max loss there. And many investors, they might say, look, if I'm going to do a trade, I want to see a max loss that's not just at zero. There's where we can see it. But if we add that long call on top, it's going to knock. What's going to do is it's going to bring up where we don't have a capped gain. And so if you look at this, when we buy that long call, you're going to notice on that is it's going to give us that unlimited upside potential. And that's what many investors, they're trying to go for. The biggest thing what you need to understand is if the investor bought 100 shares of stock, the delta would be 100, okay? By doing what we did, by buying the put, when you buy the put, it's negative delta. So it pushed the delta down a little bit from 100 down to 94.46. But nevertheless, it moves synthetically like a stock position. When you actually sell the put as well, we're trying to get the theta closer to zero. And you're going to notice that the Vega is pretty close to zero. So if we said, of which option Greek are we really trying to focus on? Which option Greek is the biggest? The answer is delta. If the delta is the biggest of the 4 option Greeks, in this case, you are trying to trade direction. If that delta is positive, you're trying to play a bullish direction, okay? So think of that delta is really the change in the option price, OP, over the change in the stock price, okay? Well, that's how I like to kind of think about delta, okay? Change in the option price given and the change in the stock price. Guaranteed is going to be close, okay? Things that can distort that is volatility. Things that can distort that is liquidity at that time, okay? You could also think of it like a potential translation. Stock goes up or down $1, approximately how much does this option move by, okay? Now, I want to we have got to close this out, but I'm going to go back and do the CCL. Let's put this trade example on. So if we kind of said, what is this trade? It's really a long synthetic. We just put downside protection on. So if we did this in the IRA, the other thing we have not made mention of, now remember, if the investor went out and bought 100 shares of CCL, it'd be $3,100. If we did this trade, how much money are we outlaying? Answer, well, we're going to put out about $80-ish plus what that max loss is. Think of that as like how much money we need to set aside. So if you add that up, about $80, okay, $80 plus, and said, okay, what's that max loss? $878. How much money are we setting aside? It's about $958. You compare that to someone that's buying the shares of stock, $3,100, you're putting out about a third of the capital. So when people talk about options and leverage is actually one way to think about it is using less capital to get exposure to the trend. That's just an example. We talked about what the differences were, okay? Now, what I'm going to do is send that order. Now, I want to kind of flash a couple stocks that some investors might be looking at, okay? Now, number one is, I'm going to also bring up RTX. We're starting to see maybe a little continuation on RTX. That's a name that we're going to keep an eye on. Rockwell Automation, that's another stock that's trying to get a little reversal. If you have a favorite letter in the alphabet and it is W, there has been 2 W's on that chart on Rockwell Automation. Now, also, we would also bring up Corning. Corning has been a ripper to the upside, and we're kind of wondering, could that trend continue with a fresh moving average crossover? The other one we're going to kind of keep an eye on is GD. GD and RTX, very similar. And if you kind of take a look at that, that kind of looks like an ascending triangle. 2 financial stocks will close on. COF, Capital One Financial, okay? almost getting above a short-term higher high. That's another name we would be watching. And we said this one yesterday, but we'll pull it up again for just a quick peek. Could Wells Fargo be actually getting above and pushing inside that old channel? That's another one to keep an eye on. If we said one more just to finish, probably Goldman Sachs, okay? So a couple of these financial stocks trying to get a little push here. Keep an eye on these. These are some examples, not recommendations, but we did a number of paper trades here today. Talked about some differences in strategy, especially when we talked about the cash secured put with downside protection, but also bringing up that long synthetic example. And what is leverage? What's the difference between like doing a long synthetic versus a stock position? Keep an eye on gold, okay, and silver, and look and kind of see, does AM and NEM continue to have that correlation? And do those stocks lead the price of gold? Now, I'm out of my time here today. Always remember that coming up next, when we actually clear that back up, coming up right at the top of the hour, if we look at this here today, getting started with options, Cameron May, that's, August, right here, okay? And if you look at this, we're gonna have a class on getting started with options, Cameron May. Also, getting started with technical analysis, Barbara Armstrong coming up as well. So thanks to all of you and Barbara as well. Now, remember with what we discussed, it was done, for example, in illustrative purposes only. Always be aware of what the risk is. And remember that when we talk about investing, it has risk. Even though you don't think so, it has risk, okay? You should know what that risk is beforehand. And what are some of the pros and cons of the strategy? With that said, this has been the class for August 26th, Investor Master Series and Investing Master Series. I want to wish you a great day. Stay tuned for Cameron May coming up next. Thanks so much. Take care.